under scrutiny as to how that would impact on the ownership of local banks in this country. It's a very, very serious concern that we'll be getting into shortly here on Business Focus. So stay with us, and we'll get into all of that with my guests who will be joining me in studio and also on Zoom. Professor John Gachi, Professor Peter Korte, and then also we'll have the representative of the National Pensions Regulatory Authority to have a conversation. I am Alfred Konse. Welcome. Now, let's take a quick wrap of some of the stories that have made headlines in the world of business over the last 24 hours.
In business today, government recorded an oversubscription in its latest treasury auction, while yields maintained the upward trend, soaring to 33.2%. Although the increased interest rate may seem appealing to investors, market watchers argue the real return is negative due to inflation rate of 38.1%. Consumers should expect reduction in the prices of petroleum products at the local pumps for the second pricing window that commenced today. The Institute for Energy Security is projecting a reduction between 2% and 6% per litre for petrol, diesel and liquefied petroleum gas. And on the international front, Manchester United PLC shares slammed in pre-market trading on Monday following the news over the weekend that the Qatari group was stepping back from a potential takeover. The Qatari withdrawal could eventually pave the way for British billionaire Jim Ratcliffe to gain control of the storied football club.
You can find more news on 3news.com. Make some time and visit 3news.com. And this is Business Focus. Right after this quick break, my guests will be joining me. We'll have a conversation on the engagement with our external creditors that's on this IMF program to get them to commit to some form of debt relief or extension of their maturities. At what cost is that going to come to us as a country? And what are the considerations in there as well? We'll have a conversation shortly, right after this quick break. Stay with us. This is Business Focus. Ladies and gentlemen, we're going to demonstrate to you the superior properties of Flamingo paint as compared to other paint brands on the market. We take equal quantities of Flamingo paint and this ordinary paint. We then dilute them with water. And now, let the test begin. The gentleman on the left is going to apply the ordinary paint, and the gentleman on my right will use the Flamingo superior paint. As you can clearly see, Flamingo has the obvious better hiding. Furthermore, Flamingo has painted a much larger area. You know, one bucket of Flamingo paint is equal to several buckets of any other paint brand on the market. Flamingo paint is made with superior formulation to give superior durability, superior hiding, superior coverage. Flamingo paint, simply superior. In a world where every moment counts, one team stands ready to deliver the news that shapes our lives. A team driven by truth, integrity, and unwavering dedication. They travel to the front lines in the tireless pursuit of truth to bring you the world stories like never before. Get ready to witness the stories that matter. We have the most trusted voices in journalism who are committed to delivering accurate, balanced, and thought-provoking news. TV3, first in news. When the sun rises, there is hope. While this hope lingers on, the citizens look up to the government, the economy, the national development agenda, and everything in between. On Ghana Tonight, it's our utmost priority to bring you insightful conversations on the economy, break down the biggest issues while setting the agenda for transformation and national development. The big and important stories are treated from the human interest angle, while the facts and the figures are painted with precision. So now, let's cut the convention and start the conversation here on Ghana Tonight. I am your host, Alfred Okamsi.
Ghana Tonight shows Monday to Friday at 10 p.m. on TV3. Brought to you by
Flamingo Paint. Superior durability, superior hiding, superior coverage, simply superior.
This is Hot Issues, your passport to the most compelling conversations of our time. We go one-on-one with the movers and shakers, the thought leaders, and the game changers. We ask the questions that matter, and we don't back down.
Tonight on Hot Issues, I sit with the man at the center of corruption investigations.
Join me on Hot Issues here on TV3.
Hot Issues, coming soon on TV3.
TV3, first in news.
Cristiano Ronaldo continues his record.
What a dream debut!
Ghana coming out again, the same squad.
For the ball, he's got it! Throw it down, King!
Sports Station, Mondays 9 p.m. on TV3.
Sports Station is brought to you by Betway, Nesta Mouthwash.
Flamingo Paint. Superior durability, superior hiding, superior coverage, simply superior.
The news that matters most is the news that hits closest.
Welcome back to Business Focus on TV3. We're live on TV3 Ghana on Facebook, DSTV channel 279, all across the world on 3news.com. Now, the Finance Minister, Ken Ofori-Atta, has revealed that Ghana has been able to secure the necessary assurances from China and France in securing a memorandum of understanding for the restructuring of Ghana's external bilateral debt. That's the next phase of this IMF that's program that we have. Ghana needs to get an agreement with the external debt holders, that is our creditors, before this next tranche of $600 million under the IMF program is released to us, all things being equal, before the end of the year. We understand that the IMF board will be meeting in the third week of November to consider the progress made by Ghana under this IMF program. But there is a lot that's going on, especially with the position taken by China, especially as one of our major and biggest creditors when you look at the pie chart representing the persons and institutions and countries that are the major holders of Ghana's debt. My colleague, Michael Ogbodo, is here with me. Michael, let's first understand this. Who are the holders of Ghana's external debt, our external creditors?
Well, thank you very much, Alfred. So our biggest debt, the part that forms the biggest chunk of our debt are the Eurobonds, about $13.1 billion in there. China is the biggest single country that we owe. We owe about $1.7 billion to China. Paris Club countries, $1.9 billion collectively. Other commercial, $3.2 billion. Multilateral, $8.1 billion. And you see, China's figure there makes them a very instrumental part of this conversation, because securing a deal with them would also give us some breathing space as we try to repay our debts. And also, the finance minister has been commenting on the progress made so far with China. And he says that the Chinese government within the past 2 months is close to reaching a similar deal with Zambia, Sri Lanka, and Suriname. So following that trend, we expect some similar cooperation from them when it comes to Ghana. Now, for a country that we owe about 1.7 billion, it is important that we secure some level of agreement with them in order to help us repay our debt and also help us secure the much needed $600 million to bring some stability back to the economy. You know that there has been some positive signs since we received the earlier $300 million that since it came, obviously it's reflected there. We've seen stability with inflation relatively and also with the dollar, and which has been around the 11 CD mark since we got that money. So obviously expectations are high should the final tranche, the second tranche come to see some positive remarks. Now the central bank, the finance minister also said that we have met the central bank governor of China and we don't perceive any opposition or reluctance in participating positively when it comes to the memorandum of understanding in restructuring of our external bilateral debt. Now, you know, when it comes to the China conversation, a lot of people are concerned about how that turns out, particularly because China is noted to collateralize a lot of its loans. So we've seen in other countries where they've taken over some of their natural resources as part of their way of recouping the loans that they've given out. So people are very concerned and keen to see how Ghana's situation pans out. But the IMF boss has also been speaking, and she says it's great to see the Ghana's Ministry of Finance, Oforiatta, and the Bank of Ghana, Governor Addison at IMF meetings. Congrats on the recent staff level agreement on the fund-supported program first review. That was part of the what made the news earlier last week, a couple of weeks back, when the staff came in, and obviously we've secured their agreement. But we are hoping that the board level finally will pull through, and then we secure the final second tranche, obviously, as we also make headway with our external creditors. Now, the IMF boss says she's counting on bilateral creditors. This is the game changer for us once we're able to secure that in reaching agreement on debt relief soon to move the review forward. So this is where we've come so far. That's our debt conversation and where we've come so far with all of that, Alfred.
Good stuff. Now, Michael, let's go back to the pie chart that makes up the holders of our external debt. And at this point, let's welcome Professor John Gachi, the Dean of the University of Cape Coast Business School. Also, Professor Peter Korte is the Director of the Institute for Statistical, Social and Economic Research, ISEP, at the University of Ghana, Legon. Gentlemen, good evening.
Michael, let's go back to the pie chart.
Good evening.
Professor Gachi, if you can reduce the volume of your TV set and kindly listen to me on Zoom, that'll be good, because we're having a feedback. Now, the finance minister, as quoted by Michael, indicated earlier that they have met the governor of the Chinese central bank and they don't envisage any hurdles per se. But from where you sit, what are some of the issues that may come up, especially with the engagement with China as the biggest single creditor to Ghana in these engagements that we're having with the external creditors? Professor Gachi.
Well, thank you. Well, it has to do with whether or not China really believes that we are in a position so precarious that we cannot pay our debt to them. Because China is aware that we are a mineral-rich nation. We have attempted to collateralize even our bauxite to them. So that is one key issue. And when it comes to external securing external credit agreement, it's very difficult because you have to convince them beyond a certain level of doubt before that can happen. Since about 2023 May, news was in town that we have secured financial assurance from Ghana's external creditors, only to realize that we didn't secure any assurance, that they were just having conversations. When the announcement came initially, we thought that pen was put on paper and everything was agreed, only to realize that there was a conversation with the governor of Central Bank of China, and that was not the real deal that we wanted. So I believe those are the things that is lingering in the mind of external creditors. Unlike the domestic creditors where the government can bulldoze its way and force them to sign on to the deal within a short period of time.
I see, but Professor Peter Quartey, Kenneth Ofori-Atta had earlier indicated, Professor Quartey, that they are not, that is the Finance Ministry and Administration government, is not sure of what haircut the external creditors will be willing to take. But knowing what is at stake, how do you envisage this negotiation playing out with the external creditors?
This is part of the conditions precedent for the second tranche. You recall that before we got the first tranche, they needed the assurance from the external creditors, which was given, was provided. So now the assurance has to translate into tangibles, into action. The details has to be spelled out. But I believe that that is where we have reached. And under the G20 framework, this is a clear procedure that ought to be followed. Zambia has benefited from this, so we are likely to also get the further details, the fine details from the external creditors.
But you see, in whatever form in which the agreement is reached with the external creditors, Professor Quartey, it will require some commitments from us, be it the extension of maturities or debt forgiveness or debt relief in whatever form. It will require some commitment from us as a country, is it not?
Certainly. I mean, the commitment will certainly going to be what is envisaged or what is outlined in the IMF document. I don't think there will be any additional commitment, except to ensure that we remain very prudent with our fiscal situation, except to say that we cannot go to the capital market to borrow, and then except to say that we will not borrow elsewhere and worsen the situation. So that is very critical. My concern will be with China, but I believe by now China, having acceded to Zambia's request, will also do the same to ensure that we are able to meet the conditions and then get the disbursement to come in.
You see, and Professor John Gachi, so Professor Quartey also shares in that same concern about China as well. From where you sit, then these specific concerns that you have raised, what kind of commitment would China, not just China alone, but the other external creditors, be requiring from Ghana? In what form that this particular agreement takes? If it's going to be an extension of maturities or debt forgiveness or debt relief, what are some of the considerations of the kind of commitments they'll be expecting from us as a country?
Well, I think that is very simple. If you come to the table to restructure your debt, there are two main issues: extension of maturity and sacrificing part of your interest. But the creditor will have to see if the extended period is such that you will be able to make meet your obligations under the agreement. So that is what the creditor will be seeing, that if I am able to grant you this, at that point in time, will you be able to pay the maturing debt? Are there signs that you are reforming? Are there signs that your revenue is performing? Are there signs that at the time that you are supposed to pay, you have not encumbered your revenue stream as to make it very difficult to pay? So those are the things that our government will have to open to China and any other creditor, so that they may accede to some of the requests that we are making.
See, but with all of these, we are seeing, especially the concern that you raise about the kinds of commitments that will come up. We're also learning that there may be possible introduction of either some new tax measures or increasing of existing tax instruments going into the 2024 budget year. Is this something that you also get? And how justifiable will that be if we see that in the 2024 budget, which is going to be presented in the coming weeks?
Yeah, whether there will be some new tax handles in the 2024 budget, that may be accounted for under the general quest to increase revenue mobilization. Of course, revenue mobilization is key to indicate whether you are able to pay your debt at a future time. But I don't think that China is going to say, bring on board this particular revenue handle or tax measure onto the stream, so that when my debt, the new debt is mature, I will use that to pay. All that China will be looking up to Ghana for is to demonstrate that the revenue basket is not encumbered. That's number one. Number two, the revenue basket is enough as to pay what is due China under the new agreement that they may be signing. I think those are the important things that will be happening, because remember, our revenue is also suffering from over earmarking. And if you over earmark the revenue, you may collect so much, but that so much is not available to do a particular thing at a future date. So those are the critical things I think may be concern for somebody who is restructuring the debt with Ghana. But those creditors may not be dictating that bring a particular tax handle to cater for my debt.
I see. Professor Kote, on that same tangent about the expectations going into the 2024 budget, which is going to be presented, all things being equal, in the coming weeks, and how the next phase of the IMF's targets in this whole agreement, this negotiation that we're going on with, because of the kind of targets that have to be achieved for the third tranche, which is going to be expected to be released, all things being equal, in the first half of, or the first quarter of 2024. Are you expecting any further increases in existing taxes or an introduction of new tax handles, which has been opposed by some economists? Professor Gachie as well has just spoken about it, and industry as well.
Well, I am personally not in favor of higher taxes. If it's more tax measures that will rope in the informal sector or rope in sectors that are not covered, that are making revenue but are not covered, that is fine. My thinking is we make tax collection more efficient, we raise more revenue by broadening the tax base, using digitalization and other means by which we can raise more revenue. Taxing the same people over and over again leads to tax evasion, non-compliance, and we might not be able to improve livelihoods of the citizenry. Rather, we bring in more untold hardships. So introducing new taxes, yes, if it's going to broaden the tax base, but not to overburden the same people.
I see. Professor Kote, appreciate the time. Professor Gachie, just the last one on this, because we see, apart from China, we have also the multilaterals as well, and even the World Bank and as well in there. One of the concerns China had raised earlier is that if the World Bank expects them to make extensive considerations for the likes of Ghana and other countries that owe them, then the World Bank should also be willing and ready to make the same sacrifices as well. Do you see that happening?
Well, I think that is a critical condition. This same condition should have applied to the central bank, because the IMF, the World Bank, etc., they are seen to be providing what we call a lender of last resort to countries. If you come to a country, the central bank, for example, is the one that gives who we describe as a lender of last resort. So in that vein, the central bank shouldn't have credit actually cut down through the DDEP. So I think that is an important matter that China is raising, because not all the debt that China has actually given to Ghana are commercial, pure commercial debt. Some of them are also classified as a debt of the nation, of the nature of the debt that IMF give to other countries. So I don't know whether China has actually reneged on that argument, or that argument is still on the table. And if that argument is on the table, then that will actually prolong the discussion.
One of the effects of the domestic debt exchange program, Professor Kachi, is the situation that especially commercial banks find themselves in, or the financial sector itself. Government talked about the establishment of this Financial Stability Fund. We've been waiting for it. Now, we understand that there's been an announcement of an investment of some $500 million as seed capital into the Financial Stability Fund, expected to take off before the end of October. And this was captured in the operational document of the Financial Stability Fund released by the Finance Ministry on October 9. Now, Professor Kachi, indulge me a bit, because my colleague Michael Obodo is going to run us through the structure of this Financial Stability Fund operational document as released by the Finance Ministry sometime last week. And we'll look at how this could possibly impact on the ownership structure of especially local banks, whether if this plays out as it is, local banks would be owned by Ghanaians for that matter. And Michael, what does it say?
Well, so first off, after the banks were impacted by the domestic debt exchange program, which government announced last year, a number of them took major hits because a significant chunk of them had their investments or had their funds locked up in government securities. So subsequent to that, government announced the proposal of a fund to help mitigate the shocks that they were to experience. A total of $750 million is to be put into a seed capital for the fund. Out of the money, $250 million is expected from the World Bank and international donor partners to support banks and SDIs. And the government will be providing some $500 million seeded by the government of Ghana for funds or bonds up to $500 million for banks, SDIs, insurance, funds managers, brokers, broke dealers, and the likes. And then there are also plans that some other funds along the line will be added to the 750. Now, to give you a brief look of what the structure looks like. So this is what the structure looks like. The Bank of Ghana serves as the fund custodian. Ministry of Finance has policy oversight. Under the Bank of Ghana, we have investee FIs who will be also supplying the funds. Then under the Ministry of Finance, which is serving as a policy oversight, there are 9-member committees, which include Ministry of Finance, regulators, 4 independent members, government and investment approval, subject to government investment approval. Then under that, there's a secretariat that will be managing the technical analysis and recommendation. Also, we have Fund 1, PIU, that's also part of the, the funds, the various cluster of financial institutions that will be receiving support from the fund. Yeah, so this is the structure with regards to the funds and how it will be disbursed across the various cluster of financial institutions and depending on their needs. So like we see here, Fund A1, debt only, basically going to banks and SDIs.
Okay, Professor Gazi, thank you, Michael. Professor Gazi, if you look at the conditions for the funding and of the banks and other financial institutions in this same operational document that Michael put it out, the operational document shows that funding for the solvency support will be structured on commercial terms, as will be offered to a private investor, and shall not be bailouts. In some instances, concessionary commercial rates may be considered with improved governance structures. So essentially, there's no bailout for these financial institutions, especially that's the banks that were impacted by this domestic debt exchange program. And what we're talking about now is commercial, this structure of solvency support coming in commercial terms. How is this going to impact on the ownership of these does local banks or the local financial institutions in this instance?
Okay, thank you. Traditionally, this stability fund is supposed to be established by the central bank. But as we speak, the central bank is weak in doing that. And that is why we bring all these vehicles together. And you recall that when this was announced, this was the fear that some of us expressed. I believe initial state they mentioned GATT. The structure you have spelled out now, I have not seen GATT in it. However, so long as there is a form of equity interest that will come in, or quasi-equity interest that is built into the disbursement of the fund, then that will lead to some equity interest in the bank that will be getting this fund. But I must indicate that it is very clear that some international banks will not access this fund. They rather will have to depend on their mother banks to support them from whatever hit they took from DDEP, because they may not be ready for those things that you're talking about to have effect on them. And then this is where the problem is. So again, we're heaping unnecessary problem on the domestic banks, which when they are they did their assessment, they may go to this fund, and when they go to this fund, all the inbuilt fears that you are talking about, that will fall on them. So again, we are not protected enough of the domestic banking sector. That is what this fund is actually doing. And again, the stability fund in the past has not been free. In fact, it was pegged at the policy rate. So when you go for liquidity support, for example, they give you at the policy rate. So if the policy rate is 30%, you will also be paying 30% on that fund that you have taken. So it is the same idea here, that you go for the fund and then you take it at commercial interest rate. And this is why the problem is. I have lent money to you. You told me you cannot pay my money. Therefore, I should engage in debt restructuring, for which I have allowed you to extend the maturity, and I've allowed you to cut down on the interest. Now, this SSL has had a toll on my operations. Now you come to support me, I should go and borrow money at commercial interest rate before I solve the problem that you have created in my operation. What is this? How sensible is that?
And that's where the concern is. And it's certainly going to have a very serious impact on locally or domestic-owned financial institutions, especially the banks, is it not?
Yeah, it is. So long as I am thinking no external bank or banks which we normally call foreign banks will go there. I believe they will depend on their parent banks to support them. And here I'm saying that domestic banks will go there or may go there. If they go there, this is the implication for them. They are now building a new structure of debt for themselves. When the government says that I cannot pay this debt, so it makes the whole thing as if it's a punishment to the local banks. So this is why we need to focus on.
Very, very important point there, Professor Gachi. Appreciate your time as always. Thank you. Thank you so much for joining us here on Business Focus. Great. Professor John Gachi is the Dean of the University of Cape Coast Business School. This is Business Focus. We'll be back shortly after this quick break. Stay with us.
Colgate Herbal is formulated from unique natural herbs to strengthen teeth and keep gums healthy. Try Colgate Herbal, scientifically proven for strong teeth and healthy gums. This advert is FDA approved.
Our mission here at TV3 is that the news comes first, and that's the promise of News Central.
With reporters every corner of the country.
Consignment to attain their action
to production, including lions,
and experts across the subjects that affects you the most.
We stay across the big stories that impact you the most as they break, develop and evolve into major national issues.
With all angles covered across the country and across every subject. I am Kemini Amano.
And I am Eric Mawina Egbeta.
News Central, coming soon on TV3.
TV3, first in news.
Get ready to witness the most dramatic kitchen battle ever. Drama in the kitchen where rivalries simmer, egos sizzle, and only one rival can claim victory. Two rivals, spatulas in hand, egos on the line. It's not just about the food, it's about the drama. Can they put their differences aside to create the most loving meal, or will the heat of the kitchen prove too much to handle? Are you a wife or a husband? Are you a girlfriend or a boyfriend? Can you cook with your partner's ex in a bid to see whose meal tastes better? Or can you compete with your mother-in-law or father-in-law in the kitchen? Then this is the show for you. On Drama in the Kitchen, you get into the kitchen with your partner's ex or in-law and prove that you own his or her taste buds. So much drama and love in one kitchen. Be part of the Drama in the Kitchen experience by sharing your details via WhatsApp on 027-722-2641. Stay tuned for Drama in the Kitchen, coming soon to TV3.
Are you ready to win solid cash every day with Cash Out? Be a proud winner of lots of cash simply by watching or listening to any of Media General stations. That's right, you are being rewarded for your loyalty. Tune in to all Media General brands. TV3, 3FM 92.7, Onia TV, Onia FM 95.1, all in Accra, Akuma FM 87.9 in Kumasi, and Connect FM 97.1 in Takrady. To enter the Cash Out raffle on your favorite Media General station, just dial *439#. Follow the prompt and pick your favorite platform to enter. Voila! You are now eligible to become one of the 10 lucky winners of a cool cash prize. Remember, this is every day, all day on your favorite Media General station. Cash out and win big! This is in partnership with Radio Entertainment Limited. This promo is regulated by the National Lottery Authority on the Caritas Lottery platform. Terms and conditions apply.
Welcome back to Business Focus here on TV3. We're also live on TV3 Ghana on Facebook, DSTV channel 279, all across the world on 3news.com. Here, Father Mankwa is Senior Manager Standards and Compliance at the National Pensions Regulatory Authority, joining us for a very, very important conversation about pensions, because of what's happened with respect to the impact of the domestic debt exchange program, and then the kind of resistance that this whole proposal to have pensions grafted in there received, which did not happen, and so how they are also mapping out the strategy to get people to understand why they need to even invest in their pensions. Mr. Ankwa, good evening, welcome.
Good evening. Good evening to your viewers. Great.
Now, there was a story published sometime last week about the failure to pay pensions. I'm sure that came to your attention.
Yeah. I think this is more of a running issue that seems to be coming up. But I think we've done quite a lot of work on that front. Hitherto, we didn't have certain powers as a regulator to be able to go after these employers.
Okay.
But somewhere a couple of years ago, we got an executive instrument from the Attorney General to be able to prosecute some of these recalcitrant employers. As we speak now, we've managed to put a lot of these employees before the courts now. Others have been able to make some payment of some of these arrears that they defaulted over the past years. So we're making we're doing a lot of work as we speak now. And again, we're trying as much as possible also to sell the pension message. Not too many people, as we speak now, still understand this whole idea of pension. I mean, you will have people, I mean, employees who don't know that their employers have an obligation to pay a certain amount as part of their contribution to pension scheme. So it is something that we do, and I think that is one of the reasons why we've come here this evening to be able to sort of get this message across to our Ghanaians.
In fact, with the conversation about, for instance, the domestic debt exchange program and all the aftermath, one of the issues that came up strongly was the proposal to include pensions, which was heavily resisted.
Yeah, that's correct.
Now, I'm sure that generated a lot of negative sentiments.
That's correct, yeah.
Did that impact on the understanding of pensions or people's own appreciation of why they had to even consider pensions in the first place?
I think the issue about the debt exchange, I think it was more like a general financial sector issue. Mm-hmm. Yes, obviously, the impact on this whole exercise had a bit of some kind of negative on the whole perception about pension. Earlier, even there was a bit of resistance from some of the trustees, mm-hmm. especially from the public sector scheme, in terms of accepting the proposal from government. But as we speak now, I think we, on top of about 80% to 90% pension schemes have already accepted the debt exchange. Mm-hmm. And again, I mean, just as we all heard from the finance minister, this is something that the country needed. And obviously, for us to sort of lose money than to go on an exchange program for us to be able to recover, I think it was the best decision that we ought to.
But you can understand why people raise concern. This is pensions,
yeah,
for that matter, and people are retiring and hoping that they would get enough cushioning,
yeah, to
sustain their lives after their work and, yeah, getting into retirement. Then the next thing they wake up to is their pensions being a subject of a domestic debt exchange program.
Yeah, it was basically the sort of investment decisions that were taken at the time by the trustees. And obviously, most of these trustees took the decisions to invest in government papers, not under any coercion. I mean, they did it through the sort of guidelines that MPR had provided. Obviously, investment is a risk and return sort of decisions that one would have to make. You've got to a point where you make a decision to invest in an instrument, and then at some point in time, you expect that that instrument will perform. Now, when the instrument doesn't perform, you ought to make a decision as an investor. Now, the government who then had taken the monies and giving you those instruments was facing some challenges. And then the government came back to say, look, I'm faced with default as against also putting you on a program so that I can make good of my promise to you. And I think if you look at the pros and cons, the decision for most of the pension scheme to accept the offer was the best. Otherwise, you would have just lost everything completely. Because from an investment,
they had no option.
Well, it is not just as the option, because if you look at our financial landscape now, we don't seem to have a lot of sort of private players within the investment space. If you look at our capital market as we speak now, mm-hmm, just a little get invested on the Ghana Stock Exchange, for instance. I mean, if you look at what we call the fixed income market, I mean, it is predominantly, I mean, dominated by
you have government. A 91-day treasury bill giving you this much of over 30%.
Well,
it will take away a lot from the long-term dated investment market.
In investment, if you're looking at the treasury market, it's the same issuer. It's the same issuer that we are dealing with on the debt exchange. So in as much as we are going after yields, we must also be mindful of a possible default, just as we came across with the government bonds. So yes, it may be attractive to go to the treasury market, but you still need to be very cautious on that. And as we are doing now, we currently at MPRA are trying as much as possible sort of to move away from this fixed income market where it's predominantly managed by government. So we are trying as much as to move into the alternatives. For instance, getting into private equity space, going into venture capital and all that, just be able to give them some kind of diversification. Otherwise, we may still wake up one day and still having about 100% of our pension fund in government securities. And as I was explaining, in a capital market space, you still need private players. For instance, we expect the likes of big companies, for instance, like MTN, issuing bonds for pension funds, but you don't see it very often on our market. So pension funds are left with very limited opportunity when it comes to investment. As we speak now, there's a big proposal for us to even be thinking about investing pension funds outside Ghana. But then we need to look at the risk to be able to now allow the pension funds to take those opportunities. So we're doing a lot, but as I said, we always have to also manage what we have here in Ghana. Yeah.
So, Hereford Amankwa, Senior Manager, Standards and Compliance, National Pensions Regulatory Authority. Thank you so much. And this is a conversation that it's not ending now, especially because of the security of pensions investments, which is a big, big matter altogether. On behalf of the rest of the team, I want to thank you so much for staying with us here on Business Focus. Stay with us. News 360 is up next. I am Alfred Akanse. Have a great evening.
Business Focus is brought to you by
Flamingo Paint. Superior durability, superior hiding, superior coverage, simply superior.
Welcome to tonight's Mega 6 Lotto Draw. Each draw takes place on an automated GLI certified smart playing machine in front of a panel of NLA appointed adjudicators. And the first number out is 7. 13.